Indians love to spend on food, clothes, travel, gadgets, and more. But what if you could turn that everyday spending trend into an investment opportunity? That's exactly what Motilal Oswal Consumption Fund aims to do. So let us break it down in this video. Hi there, welcome back to holisticinvestment.in, where we help individual investors like you to make the right financial and investment decision to reach your financial goals in a more faster and smarter way. Now, before analyzing this fund, let us first understand a few basic details about it. This is a thematic equity fund that invests in companies linked to India's growing consumption story. Think FMCG, retail, autos, consumer durables, travel, and more. The idea is simple. As India's middle class grows, so will consumption and so will these companies. Now, as this is an NFO, it opens on 1st October 2025 and closes on 15th October 2025. And some of the key features of this fund are: this is an open-ended fund type which belongs to the category of equity thematic consumption, and it has Nifty India Consumption TRI as its benchmark index, and there is an exit load of 1% for redemption within 3 months. And also there is no entry load, and the minimum investment amount required to invest in this fund is just 500 rupees. And the fund managers for this NFO are Mr. Niket Shah, Mr. Varun Sharma, Mr. Rakesh Shetty, and Mr. Balchandra Shinde. And according to the riskometer, the risk involved in this fund is very high. So the primary investment objective of this fund is that it seeks to generate long-term capital appreciation by investing predominantly in equity and equity-related instruments of companies benefiting from the consumption theme. So now, as we have a basic idea about this NFO, let us move on to the analysis part of the video, where we are going to take a look at the pros and cons of investing in this fund. So let us start with the pros. Number one, strong long-term theme. So rising income and urbanization in India mean consumption is expected to keep growing. And number two, diverse sectors. It covers like FMCG, autos, discretionary spending, and even e-commerce related businesses. And number three, structural growth story. So India's demographic dividend and rising aspirations support this theme for decades. And finally, number four, the potential for wealth creation. If consumption in India continues to boom, the fund could deliver strong returns in the long run. So these are some of the advantages of investing in this fund. Now let us take a look at the disadvantages. Number one, thematic risk. Since it focuses only on the consumption theme, diversification is limited. And number two, short-term volatility. Consumer demand can slow down during economic downturns or inflationary periods. Number three, overvaluation risk. Popular consumer companies often trade at high valuations, which may impact returns. And number four, not ideal as a core portfolio holding. So this works better as a satellite investment rather than your primary fund. So these are some drawbacks that you need to keep in your mind before deciding to invest in this fund. Now, what is the final takeaway then? Is investing in the Motilal Oswal Consumption Fund worth it or not? So in short, this fund lets you ride India's growing consumer story. So it can be a good thematic play for investors who believe in the long-term trend. But remember, it comes with concentration risk and should be considered only as a small portion of a well-diversified portfolio. But our personal recommendation is that if you are a first-time investor or even a conservative investor who's not willing to take a lot of risk, you should definitely avoid investing in a thematic NFO like this. If you still want to invest in a similar theme like this, there are other similar existing thematic funds in the market with a track record of at least 7 to 10 years, where you will be able to analyze how it has performed in the highs and lows and be able to take a calculated risk. But here, if you're looking for funds to add to your core portfolio, definitely avoid investing in it, because as I have already mentioned, without proper portfolio and research, investing in it is blind risk. And if it underperforms, the overall returns in your core portfolio will also underperform. So this is something you can avoid by not investing in it. And also, even for a seasoned investor, investing and entering an exit from a thematic fund is very hard when to do that, like predicted. So if you're like a beginner or a conservative investor, it's better if you avoid investing in this fund. And also, if you have any doubts and you need professional guidance, you can definitely consult with a financial planner who will look into the suitability of this fund's investment objective objective and whether it aligns with your financial goals or your objective. And also they will look into the risk profile of this fund and see whether it aligns with your risk tolerance, and they will look into the overlap ratio between this fund's portfolio and your portfolio, and whether the overlap ratio is higher or lower, and also how much allocation should you give to this fund or should you give it at all, to see whether that will help you achieve your goals more faster or smarter or not. So they will look into all these factors to help guide you in a much better way and strategically achieve your goals. And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.